Well, I'm not terribly optimistic, I'm afraid. I don't want to sound like Eeyore the donkey, but and there is some good news. I mean, we will emerge from the pandemic. There are vaccines; they look like they're going to work, and maybe by who knows the middle of next year, we'll be all able to go about our business in a way that we haven't been able to for 10 months now. So, that's the big positive news. We will emerge from the pandemic. That wasn't entirely obvious a couple of months ago. So let's not forget that. However, we will emerge as a very damaged economy in the UK, not just in the UK, for most developed economies. Unemployment's going to be a lot higher. It's not quite clear how many small and medium-sized companies will make it through to, what might be more normal conditions several months down the road, and how many of them will never reopen. And of course, we know that there's been a lot of damage to the education of young people, and that'll have long-lasting effects. So I think there are reasons to be pessimistic about the ability of the UK economy to bounce back to where we were by the end of next year. I suspect that actually the damage will be rather more long-lasting than that.
In terms of where we're losing a lot of the jobs, David, as well, I mean, of course, there's some very important industries which have suffered some very tough times as well. But the industry I can see that's taken it really the full brunt is hospitality in areas such as that. And I do have high hopes, and again, maybe forlorn hopes, that areas such as retail, areas such as hospitality can bounce back rather quickly as well. And that is a very typical part of the British economy, isn't it, that we are so service-oriented?
Yes, you're right. It's a very service-oriented economy. I mean, 70-odd% of GDP is services now. Manufacturing is, barely 10% GDP. And you may be right. Households have built up a lot of savings. They'll be keen to spend money on entertainment and retail and get back into shops when they're a bit more normal. I suppose again, not wishing to sound like Eeyore the donkey, but I think there's a concern about just how much capacity may have been lost in that sector. How many small and medium-sized companies in retail, in hospitality, entertainment, sport, have been so damaged by the hit to their revenues that actually, even though demand may be there a few months into next year, they just give up because they're basically insolvent. And that's very unclear at the moment. I mean, I hope the answer is most companies will make it through and they'll be able to start up again. I think there's going to be a tail of companies that just can't open the doors again.
David, as we look at the Bank of England and how it is manoeuvring around the train wreck of economic consequences that you're describing here, we've had a lot of chatter about negative rates, but so far we haven't seen the trigger pulled. Is today the day, or do you think it's some way off?
I'd be very surprised if today is the day. I suspect there's a good degree of skepticism in the Bank of England amongst many of the members of the Monetary Policy Committee about whether or not taking interest rates into negative territory would be on net beneficial. It seems to me there's at least as much reason to think it might have some negative effects that it might have some positive effects. And I think that's what will make many of the members of the Monetary Policy Committee hesitate for a good while yet before pulling that particular trigger. My guess is, for what it's worth, that we won't get there. But today, I think it's extraordinarily unlikely.